All right, everyone. Welcome to the very first episode of Capital in Motion. It's been a couple months since I've uploaded a video. We were running the Crypto Coffee Lo-Fi series, but I think the vibe has changed and the energy has changed. We're moving towards something much bigger. We're going to be covering not only crypto, but all of TradFi, geopolitics, corruption in the world, everything. We're going to be touching on a lot more topics. I'm going to be opening you guys up to a lot more of my personality and a lot more of the information that I've been taking in over the last 10 years. Nothing on the back end has changed. We still run an open, free Discord. I don't charge anyone a fucking cent, okay? 10 years of experience, all compiled into a Discord. I'm there 7 days a week, sharing everything, sharing all of my trades, all the information. So let's get stuck into it. All right, so we are starting a little bit late. If I had have created a video or started the series last week, we would have been touching on some of the stuff that's happening with the Iran war. Like, obviously, that's still a massive topic. But rather than touching on that and the disruptions that it's going to have all around the world, which is kind of what we planned to do last week, I thought, especially after the announcement from the IEA this morning, about how they're going to release a massive amount of their reserves, about 25 to 30% into the market. It's probably best to talk about the impact that's going to have, and more specifically, where we can actually place some bets. Okay, so just this morning, the IEA, a couple hours after open, announced that they're going to release 25 to 30% of their supply, that oil supply that is sitting in their reserves. It's about 300 to 400 million. It's a massive amount of oil. And obviously you can see how the market's reacted to that. And we have some screenshots up at the chart. We do have an open Discord. It's free. There's absolutely no gated access. So that's where the screenshots are from. So we had a massive run up. The Iran war kicked off over the weekend. Okay, so if you were trading oil, you could trade it on Hyperliquid. That's what we did. And we've just closed out just after the open today, literally at the fucking Pico. Okay, so we called the Pico bottom and then got rid of most of our position at the Pico top. You can see how the market's reacting. I don't think, especially with a lot of the speculation in the air and how that's going to affect the market, especially because nobody knows how long this war is going to go on for. I think the most likely scenario for oil here is to chop around between the $100 and $120 mark. That's what makes the most sense to me. There isn't really a trade setting up here unless, you see a massive drop off and then the continuation of the war and escalation of the war, further wipeout of the oil production over in the Middle East. Then it would make sense. But other than that, I don't think there's any point in trading oil here. If you didn't short the top and you're not in from the bottom, then I think it's best to just stay out. And now there is still a play. Okay, what we're looking at is XLE versus SPY. Now, I'm going to cover a few fundamental topics, okay? But I'm not ever going to pretend that I'm an expert in something that I'm not. I'm good at trading. I'm good at charting, okay? It's important that you're able to find an environment and a narrative to back your trade or a reason to fucking gamble, okay? So I'm good at doing that, but I'm never going to dive too deep into things that I don't fully understand. However, XLE versus SPY. So XLE is the energy index for energy stocks in the US. Often, XLE is a lagging indicator. So if the market sees oil chopping around, or at least sitting up above or around $100 for a long period of time, expect XLE to fucking rally. In a war, are we going to see ES rally? Are we going to see the SPX rally? No, we're not. Okay, most likely we're going to see a drop off, and we'll cover what that looks like in the charts in a sec. So if we're expecting ES to drop off, which is what we generally see in a war, but then at the same time, we're seeing oil chop around this mark, a lot of traders are going to see a lot of potential in energy stocks, right? It's pretty simple shit. And if you go and look at the chart, it's kind of screaming higher here. So we've broken out of a multi-year downtrend, right? We're not late to the party, even though Catching it here at the start of the year would have made the most sense. If you look at how parabolic the markets tend to move, especially in these kind of situations with a giant fucking war happening, bro, there's probably a massive opportunity coming up. So XLE versus SPY. I'll be trading this over on Pair. Okay, it's a layer on top of Hyperliquid. You can just search up Pair Protocol or go into the Discord, link in the description. We have more details on how to trade on that exchange or how to trade on that layer. But this looks good to me. So I would not be surprised if you see a rally over the next couple of weeks. Oil prices remain high. These companies are going to be making an absolute fucking killing. It's that simple. So run this up. I'm thinking to the 1-2 mark at least. Right, that's an easy trade. We're going to be holding this for a couple months. Okay, that's XLE versus SPY. So I don't think that there's going to be many opportunities in oil. I mean, I could be wrong, but catching a fucking move like this is kind of a once in a lifetime thing to happen. I'm not going to give back a lot of the profits by trying to catch another bottom around here, unless I'm given a massive reason to do so. Okay, so that's US oil and what we're seeing for XLE. Nat gas, although it is directly related, and you will see nat gas kind of move in line with oil when you see geopolitical risks like this arise in the Middle East. That kind of makes sense. However, nat gas is kind of separated from that, in my opinion, because we do have a massive seasonality aspect as well. So looking at two opportunities, we got a small position in last week, but I think we get a massive compound opportunity as this gap starts to fill. So if we can get that gap fill, you can look for an entry around $3.20. Or if you get up another break and structure up above there, then we miss that and we look for a retest. So, okay, something like that. There's a bunch of gaps to fill up here. I don't think that we're going to start a whole new bull rally. But if the market structure permits us, then, you know, keep going long. We could dip down and start to just completely invalidate this idea. I don't think that will happen, especially after the gap up that we saw today. What we're looking for now is further confirmation that we're really right on this higher time frame trend. So keeping an eye on nat gas. All right. Now we're going to quickly move on to ES and the Magnificent Seven. Before this war, there was a massive amount of money flooding into the stock market, really just because of AI. It was an AI-driven rally. Now, during a war, especially where you see massive hits to the energy sector, how do you think AI is going to perform? How do you think the companies are going to perform that are backing AI? Energy is the biggest bottleneck to the progression of AI. And if you see a massive hit in the energy sector, where the fuck does that lead? Okay, so we're kind of taking advantage of that in XLE SPY. However, you could probably look to enter some shorts here on ES. All right, so try to keep this very, very simple. It's really quite difficult to trade. My strategy in particular, if you know my strategy, where we look for sweeps and breaks on the lower time frames, etc. So we will get into a few crypto plays, but for now, when you're looking at something like ES, you want to look for gaps to be filled, supply to be retested, and then maybe you can look for a lower time frame distribution pattern or break there. So looking for ES shorts today, especially as that gap fills. I see no world where stocks continue to rally when they're being fully driven by AI, especially because AI's biggest bottleneck is energy. And you see what we're seeing? Like, I'm just trying to put two and two together. I think at some point Trump will step in and do something. I think at some point it will bottom. I do not think this is going to lead us into a massive multi-year bear market and an extended crash all the way down into the lows from last year. However, I think over the next few months, especially when there's a lot of uncertainty, you could short the fuck out of ES. And it's pretty much the same deal here. Something, oh fuck, definitely not that. But something like this, maybe wipe out some longs. really, as soon as the market opens, just start shorting everything. Just start shorting everything and hold that for the next couple of weeks. That's the plan. I'm not really going off of technical analysis. It's more just a common sense trade. And I think a lot of people are going to be seeing the same thing, and it's just going to get carried, right? So we have this gap here that we could fill. There's some accumulation here that makes sense for a retest around $50, plus it being the $50 mark. Once we reach into there, if the tensions start to decrease with Iran, Israel, and the US, then maybe we can start to get long. It just depends. You know, there's a lot of moving factors. I don't like to try to look too far into the future. So definitely short the Magnificent Seven and ES going into New York and for the rest of the week. I think that's an easy play. All right, so now we're going to have a quick look at metals. This one's a little bit more difficult because you would think during these tensions and during a fucking war, metals will rally. But I think for the most part, the reason that they did rally at the start of the year was because of these tensions arising, and a lot of that has been priced into the market. Like I said, I'm not going to try to understand things that are completely out of my depth, bro, but I can kind of put two and two together and then see if that's applicable on the chart, which is what I've fucking done here. Okay, so we took out these highs, and then we've gotten a break in structure last week, a shitty weekly close, right? So I think if we can run out some liquidity and then fall back below here tomorrow, I think silver is going to be an easy short. I would not be surprised if we reach into the low 50s. Right, so that's silver. Gold's pretty much the same story. So nothing yet. Wait for a run of these highs. If we can run the highs and then break back below and see another lower low and lower high, then this will be the trigger. If we get that, I wouldn't be surprised if we run out the lows at 4,400. All right, from there, you know, we can start to look to get long again. But for now, I'm just not seeing any trade in gold other than to get short on another structure break. So that's gold and silver. Feel free to comment how fucking retarded this take is, bro, but I'm pretty sure that I'm right. So we'll see how that goes. All right, so we had a quick look at gold and silver. I actually think the better trade is to look at gold and silver paired against Bitcoin. These charts are much cleaner than the Bitcoin chart itself, and they're a lot cleaner than the gold and silver charts. I think the market is looking for an inflation hedge that isn't overpriced, and I think that's what we're kind of seeing. We're seeing large players in Wales start to accumulate Bitcoin again. However, the cleaner trade is silver and gold against BTC. Okay, so very, very simple shit. Here we have some clean lows, consolidation, and a breakout. I think this is an overextended move, and we're due for a retrace back into support. It's really that simple. And when you align that with my theory that people are still looking for an inflation hedge, people are still interested in digital money. Bitcoin hasn't just gone away. Okay, and I still think there's a chance for us to really show Bitcoin's true potential and in its original use case, which is to be a global hedge against inflation. Okay, a digital hedge against inflation. So I'm thinking that we've topped out for the session, but we could possibly make one more high, and this is kind of in line with what I'm seeing with gold and silver. I think we could see another high today or tomorrow, but if not, if you get another lower low here, then that could be the trigger as well. So looking for a run up, a sweep of those highs, and then another break in structure, or if we don't get that today, look for a break in structure there, a retest, and then short that all the way down into here, okay, and into the 085, 09 region. Once we get that, Bitcoin looks like shit again, and gold and silver have start to pick up some steam, then we can look to cut the position. If not, then we can trade it down into these lows and then look to long from there. But we'll just have to wait and see. I think we've temporarily topped here, and then we're going to retest support. It's quite an easy trade. Okay. The gold Bitcoin chart, the exact same story. Okay. Support here, moving right into resistance, and now we're starting to chop about. I think that we are due. I'm not calling for the end for the end of the pairing. I'm not saying that we drop off and start to head all the way back down into these lows. I don't think that that's what's going to happen, but I think over the next week or two, you see a pretty clean trade right back into support there, okay? So that's gold, silver, and the pairing against Bitcoin. I think that's where the money is. Moving on. All right, now taking a look at Bitcoin itself here, I think this chart is a little bit trickier to trade. I still believe that throughout all of this consolidation, we're seeing a bunch of accumulation and that we're due for a much higher leg up into the high 70s, low 80s, okay? And this is kind of in line with what I'm seeing on the gold and silver pairings as well. So let's cover this chart really quick and talk about what an invalidation and what a trigger might look like here over the next couple hours. So if you haven't watched any of my videos in the past, now that we're breaking down some actual trades and triggers, right? We are just looking at one pattern. The pattern is designed to give us easy entry and exit criteria when we're looking at market structure. It just follows market structure. Not only does it follow market structure, it also looks at what, it's an easy way to identify what big players are doing in the market. There's no strategy that has a 100% hit rate, but at least this gives us a refined criteria to enter and exit positions. I'm not looking at a million indicators. I don't have a million reasons or a million indicators telling me to enter and a million indicators telling me to exit. I think that's fucking bullshit. I think people that make money refine their systems and have easy, repeatable strategies. Okay, and that's what we've got here. So if we're looking at accumulation and we're looking to get long, it's really quite simple. We wait for price to reach into an area of demand, okay, or an area of liquidity. An area of liquidity could be a key swing low or a double bottom or something like that. So if we have liquidity resting here, or this is an area of demand, you wait for price to reach into that area of demand or area of liquidity, form another low, and then break structure, break the structure here, form another lower time frame low, sweep it, and then break structure again. A double confirmation, essentially confirming that market structure is shifting, confirming that players are accumulating. Now that's what we're seeing here. So I could be fucking wrong, bro, but I'm just going to repeat the same thing that I've been doing for nearly 10 years. So that's exactly what we're seeing here. So let's break this down really quick. We've got a sweep, a breaking structure. We return to this breaking structure and we got another sweep here, but it's kind of shitty. We did leave these lows, so that's my one bit of caution about this trade is that we do have equal lows resting here. So just keeping that in mind. Let's move on though. So we have another sweep here and then another breaking structure around the daily open today. So that in itself is a trigger. So you could enter long here with a stop below here. However, like I said, we do have those equal lows. So the one entry is right now, or over the next couple hours leading into New York. You could refine it down a little bit. If that fails and we start to get H4 closes below here, then you could probably look to shave, okay, wait for a dip below into those lows and then some more accumulation, something like that. So those are the two entry triggers for Bitcoin. We were consolidating for an entire month in this range. I do not think it ends with just a small peak above it, okay? We got the peak above and now we've grabbed liquidity. That's everything anyone needs to fill all of their positions. I would not be surprised if we come up, fill this gap here and reach into the high 70s, low 80s, okay? So that's Bitcoin. There's a long trigger now. I'm gonna wait for New York to see how everything pans out, to see if we can get another lower time frame trigger there. If that starts to fail and we start to drop off, look for these lows to get tagged. If we tag them and then we start to get some accumulation, the pattern that I explained here, then that's gonna be an easy trigger. If they don't get tagged and we get some more accumulation around New York Open, you can long, you can target this area of supply up here. If that starts to break through, so if we don't get more distribution, the same pattern but flip to the downside, if we don't get that and instead start to run up, then you can just assume that this is gonna go fucking parabolic all the way to 80. What we do from there, I'm not sure, bro. I'm not trying to predict anything. As you can see, all I'm doing is waiting for patterns to form and then reacting. All right, so that's Bitcoin. All right, so taking a look at Hyperliquid. If you guys haven't checked this thread out that I posted, it's pinned to my profile. Go and check that out. This is where most of my capital is parked and where most of it will remain parked for the next year, maybe even longer. I think this is the future venue for all finance, and that's pretty fucking obvious, especially with what's happened over the last week or two with the Iran war and the massive, massive increase in HIP3 volume. I think just yesterday, or maybe today, we hit $1.2 billion. $1.2 billion of volume on HIP3. So if you don't know what HIP3 is, go and do your own research. I'm not going to explain the tech of Hyperliquid. If you're watching this video, then you already know, most likely. If not, well, what the fuck are you doing? You probably shouldn't be watching my video. I think they're only going to keep growing. We'll get into the chart in a sec, but there is so much potential for this to literally become the decentralized venue for all of finance. That's not an over-exaggeration. This is an easy fucking bet, something that you should just keep buying. Keep buying spot on dips. Don't worry about perp positions, okay? Just keep buying spot on dips over the next couple months. Regardless of unlocks, regardless of anything else that you see, the tech is here to stay. The people running the fucking business know exactly what they're doing. They know how to keep the chart up. They know how to run things, okay? So do not fade this. And then you also have HIP4 being released. What do you think happens when retail gets prediction markets on this shit? You had the Bloomberg article being posted the other day, right? Have we had any issues trading Hyperliquid or trading oil and trading gold and silver? The gold and silver drop a couple weeks ago was clean and easy. No issues there. The oil run up, clean and easy. No issues. The use case is there. It's proven that it's going to work. It's been proven that people want to trade 24/7 markets. It's here to stay. Just keep fucking buying it. Keep buying it. Go and read the thread. This analysis, right now that we get into the chart, is playing out absolutely fucking perfectly. We are in the second phase, right? So if we zoom in on that, is that going to work? No, of course not. We'll just cover it in the chart, right? So you can see I posted the thread. Where did I post it? Yeah, around here. Okay, seeing one more dip into 28s, 27s, and that's where we loaded the fuck up. There's going to be another opportunity coming up here, so let's clean this chart up a bit. So we ran out this key low, and then we saw a break in structure. And then we had all of these key lows resting here, which we swept. And then another break in structure, and this was the Iran war kicking off, okay? So we have all of the fundamentals and the chart lining up. We've got another sweep there. So like I said, when we were taking a look at Bitcoin, the strategy is really, really simple. You wait for key lows to be swept where there's a bunch of liquidity resting below. Once we sweep those lows, you're not looking to enter there. You wait, okay? Do we get a break above the high that took the lows? If we do, that tells us right here, that tells us that bigger players are entering, and then there's a bunch of demand that was scooped up below that low. So now that we got that, price chops around. Let's move this over. Price chops around and we form more lows, which is what we saw here. Now, are those lows being used as liquidity to fill more orders? We don't know, we don't predict, but look at what fucking happened. They did. Absolutely textbook. You do not get any better than this. This is the cleanest trade that you will probably get all year, right? So now, if you're not in already, let's talk about executing and compounding. And break it down here. So we did get a sweep, and we have gotten a break above here, a break above highs right here. In the short term, this is going to be hanging on Bitcoin's performance, right? If I'm correct about Bitcoin's run up, then over the next couple of hours, what we're going to see is probably a run of these lows, collecting them, and then a massive run up. If we can get something like that, if you get the run of the lows, and then a lower time frame break in structure, full port that shit, and it will probably get sent up into the $42 mark. If we don't get that, and I am wrong on Bitcoin, then one more drop into the pre-Iran kickoff somewhere around here, where you can then look to scoop more. If we do start to get daily or weekly closes below the $25 mark, I'm just going to have to cut the trade and reassess. I'm completely okay with doing that. There's very, very, very few times that you will get conviction bets like this. I'm okay with taking a loss and re-entering later. If I do get taken out and we do start to get daily or weekly closes below $25, then fucking so be it, bro. I would just look to re-enter. The idea has not changed. The plan has not changed. But for now, I think the low is in. If Bitcoin holds, then look to enter below these lows. If Bitcoin doesn't hold, wait for us to take out these lows and see if we can get reaccumulation below them. Very simple shit. Hyperliquid is the bet of 2026, without a fucking doubt. Without a doubt, right? I'm not going to be a dickhead and start comparing market caps, but imagine, or not even imagine, is it really that far out of reach to flip XRP? Consider, if Hyperliquid succeeds and they achieve their goal, why would XRP be sitting above Hyperliquid in market cap? Why? Who's using XRP? This is the most excited I've been about crypto since Bitcoin. There is nothing else, or maybe DeFi actually, the whole ETH run up and DeFi run up. Okay, but there's nothing else since then that has piqued my interest. I've been doing this since 2016. I'm not fucking wrong here. And there's a lot of people that are much smarter than me that are making much bigger bets who also fucking agree. All right, Hyperliquid, everyone. Hyperliquid. My little character, bet more, bro. Just buy it. All right, now taking a quick look at Solana. To be honest, I think for some reason the charts are telling me that the inferior chain, Solana, rather than Ethereum, is the bet. Okay? If Bitcoin is to find a bottom here and Bitcoin is to rally, I think Solana actually outperforms the all of the majors, right? So let's take a quick look at Solana. We have a sweep there. We've got a break here. And then we got another sweep here, taking out all of those lows. Really, really clean chart. If this fails, I would be really fucking surprised. I do not think it will, right? So we got a sweep, a break, a sweep, a break. Lining up with our idea on Bitcoin. I think this is bottom. We're already in Solana. New York could provide another entry here, something like this. If we get some H4 closes below here and we start to drop off, then the whole idea is invalidated. Maybe we can look again around $78, $79, but I seriously fucking doubt it. This is going to be a solid bid, a solid bid going into New York here. All right, so run that up. We've got a gap fill that you could target. We have all of this supply that you could target. But if we're right on this, then we're going to be right on Bitcoin. If we're right on that, on Bitcoin hitting the high 70s, low 80s, then we're probably going to see a peak above $100 on Solana. We've got these highs here and another gap. I wouldn't be surprised if they get filled. Now, again, like Bitcoin, what we do from there, I do not fucking care. You know, we'll wait to see what happens, essentially. We always react. We never predict. So that's Solana. All right, we did not cover the Sol BTC pairing. Okay. So roughly the same strategy here. When you're looking at BTC and ETH pairings, for my strategy anyway, I don't like to trade it traditionally. As in, I don't like to look for the same kind of patterns, you know, with the same accumulation or distribution patterns. I rely more on traditional market structure and traditional patterns forming. So we do have a sweep here, and then we've got a break in structure right here, telling us that Sol is seeing some strength against Bitcoin. And then we have this downtrend here. Now that's retesting. We've got another sweep and another break right here. So, yeah, we've got some clear sweeps, some clear accumulation. We've got some breaks in structure. We now have a break of this trend line. You can go ahead and trade this on pair. I'm not in there yet. I will wait for that break. Once we get the second break up above here, as long as then after that break we don't move back below this low, then I think we get clear movement all the way up above these highs. So that's the reason why I think Solana will outperform Bitcoin and ETH if I'm right on the up move over the next couple of days. I think that Sol BTC chart is going to rally, so targeting up here. All right, so that's Sol BTC. Moving on now. All right, so we will cover Ethereum simply because I think it's the weaker, shittier asset for a lot of reasons that I don't fully understand. But when you have the founder actively fucking selling millions of dollars into everyone and basically saying that the tech, for the most part, is irrelevant, there's no reason to believe that it's going to see a rally or outperform anything until those two things change. Okay, so it's always important not to just get blindsided. So even though I'm bullish on crypto as a whole this week, I think it's important to possibly lay out a short scenario. So we've got ETH here. We took out all of these highs, okay, all of that liquidity resting up above that high, and then we got a break in structure here. Now we have all of the liquidity being taken above these highs just there as well. So if we can get one more push up around New York into here and then some distribution, then you could probably take a short there as a hedge against the Bitcoin and Sol, longs, right? So that's kind of why I'm bringing up ETH here. That will be my short play for the week. Additionally, you can see we didn't take out the lows that we took on Bitcoin and Sol. So that might print us an easy short. If I'm wrong on Bitcoin and Sol, then this should cover our asses. If these lows get taken, then I see these getting taken. If they get taken, then what else is there holding us up and stopping us from running this low? Okay, so that's Ethereum. It is just shit. It is just shit. Right, moving on. All right, with that, let's end the first episode of Capital in Motion. I'm going to be doing this a lot more consistently. I know a lot of you guys enjoy the fuck out of the Crypto Coffee and Lo-Fi series. I think the vibe has changed a little bit. The energy has changed a little bit. So we move away from Crypto Coffee and Lo-Fi and we move towards Capital in Motion. Really excited about this. I think there's a lot of great things to come. We're not just going to be talking about crypto. We're going to be talking about geopolitics. We're going to be talking about the corruption in the world. It's going to grow. It's going to grow to something massive. Okay. No worries, guys. Enjoy the rest of your day.